What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol CEI for Camber Energy. They did have some sort of catalyst today about a carbon capture technology that they're working on, but as you know, I am a technical analysis and expert in price action and not so much the fundamentals. On the left-hand side, we're looking at the daily time frame, and on the right-hand side, we have the 30-minute intraday time frame. Clearly a large breakout on that catalyst to the upside today. Let's see what's going on in the extended hours. I do believe we will be opening on a gap up, just considering the fact that, again, we already made a second push in the post market here. So let's assume for the sake of today's video that we're opening somewhere around, grabbing the other tool quickly, somewhere around this 0.7439, and that the overnight high is going to remain up here close to 0.77. We'll turn this back off and focus on the daily time frame chart to talk about the scenarios that we use whenever we're dealing with a gap up. Remember, these numbers could change by 9:30, but this is the framework that you use to essentially get into a risk-friendly trade or just avoid being on the wrong side of the trade, right? If we quickly go over to the trade tab, you can see that it's hard to borrow. There's clearly no options chain, so you're not going to short it via puts. But if we do something like this and get the gap and trap, what we're looking at is an open here. Failure to take out the overnight high would put into play the gap and trap, meaning we come into today's high, which is roughly around, let's go ahead and map that out, 0.6783. And again, are you going to short that? No, it's not really possible, but you're just going to avoid longs in that case. Now, when we fill the gap, start to be on the lookout for a gap fill reversal. So hammer candles that print, indecision dojis that print, basically anything that would make you question, is this pullback coming to an end? Can we flip long over these highs and get back into those overnight targets, which we just discussed? Now, the flip side of this coin is the fact that we could get the gap and go, meaning the long trade would develop like this. We open here, consolidate in this range, take out the overnight high, then we're looking at the next major area of daily structure for a target overhead to act as potential resistance. So a breakout here, I'm noticing that we had a prior pivot high around this 0.8049, and after that, very emotional breakdown. I would argue there's really some room to run up towards 1. Again, I'm not saying it has to get there all in one day, but from a structural perspective, that's the number that I'm seeing. So please be very careful whenever you're trading something that's sub $1. It can be very easy to just take oversized positions because you say, oh, this thing's so cheap, it doesn't really matter, right? But whenever you're dealing with something sub 1, just a couple pennies worth of movement is huge in terms of percentage. So please size your position accordingly to help manage your risk. To the upside, those are the targets. As I said, I'm not trying to be overly optimistic, but from a structural perspective, 1 is really the next area that I'm seeing that could offer some resistance. So you know my thoughts here. Please, again, I want to hammer home the point really that you need to be cognizant of your trade size whenever you're dealing with something sub 1 to help manage risk. I hope that's kind of annoying, the fact that I've brought that up so many times so far, but it's so important. So if you learned anything from today's video, even if it's just what I just mentioned, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.